Welcome to Share Talk, the only podcast where investors come first.
Falcon Oil Gas announced the spudding of the Kyalla 117N21 appraisal while in Australia. There are now 7 companies currently drilling. In addition to Falcon, there's Petro Matad, i3 Energy, UKOG and Gas, Alba Mineral Resources, Coro and Empyrean Energy. UKOG and ALBA both updated this week, announcing that casing has been set. The well will now drill down to the coring point, where 3 60-foot cores are planned to the oil-bearing Portland reservoir to ensure the 1,000-metre horizontal section is correctly positioned within the most oil-productive zone. The well will then drill ahead to total depth and be plugged back to the starting point of the horizontal trajectory, with HH-2Z following directly afterwards. Both HH-2Z Portland and the HH-1 Kimmeridge well are expected to be put into long-term production by the end of 2019. Raybould Resources went through its usual placing drama, although a little more than usual since it was raising $24 million this time. I think what's happening is happening because the placings are extensively forward sold, and I doubt they could raise these amounts as actual investments. Solar Oil made an interesting announcement. It's entered into a binding sale and purchase agreement to acquire a package of non-operated interests in natural gas fields in the Dutch sector of the North Sea. 3 interests are in 14 gas fields, producing around 99% gas, 1% condensate, and are mid-life assets with relatively low abandonment expenditure. The aim is a self-funding balance sheet going forward, with follow-on development potential funded by reinvestment of free cash flow. Since it's classed as a reverse takeover, its shares have been suspended, and it will be possible to express an informed opinion once the admission document is published. Jersey Oil and Gas shares came off sharply when it announced that Equinor had elected not to exercise its 3-month option over a 50% equity interest in respect to the blocks containing the Buchan oil field and the J2 oil discovery. The interesting thing about this is it was already obvious Equinor was not proceeding from the previous day's announcement that Jersey had by itself made development contractor appointments. They tried to stabilise the price with the announcement of an independent assessment of resource and valuation estimates, showing technically recoverable resource volumes of 94.7 million barrels of oil net to JOG, and a mid-case contingent resource valuation MPV-10 of its P2498 licence, together with a valuation of JOG's 18% share of the Verbier discovery of 791 million. Jersey's now reduced market capitalisation currently is around 40 million. Moving on, news from all the other companies who've made announcements so far this week will be covered in the Sunday blog, and I'll be back on Saturday with another podcast focused on whatever interesting looking news comes out in the remainder of the week.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.